Welcome back to anything related to Tesla shares, everyone. We're going to talk about landlord influence and a well-known Tesla stock study today. If you're interested in learning more about Tesla's prospects, you should watch this video. According to Meet Kevin, the company's second quarter will likely be the toughest, and after that, it will likely rebound strongly. This will hold unless China's president decides to shut down the country completely again, in which case Tesla will be impacted as one of its main factories is located in Shanghai. Meet Kevin Paphras has a YouTube channel called Meet Kevin. In his last few videos, he's been explaining how the current economic situation influences Tesla and its stock price, as well as his take on what investors can expect regarding current stock prices and Tesla's future. Kevin thinks there won't be much more of a decline in Tesla's stock price. We predict that it won't drop below the 600 per share threshold. Additionally, according to Kevin, the earnings per share, EPS, for the second quarter would likely be lower than the EPS for the first. You shouldn't be deterred by the statistical prediction either, as there are more factors to take into account when projecting Tesla's future. For instance, there is more regulation in the autopilot sector, which is actually a good thing because Tesla is a pioneer in this area and may be able to influence how the regulations are developed. Furthermore, according to Kevin, the price of Tesla stock will not only cease falling but also try to rise, experiencing a genuine price explosion. A primary driver behind Tesla's 3-for-1 America study is the fact that firms that split their stocks eventually outperform the market. This is explained by the fact that more investors purchase stock in a company when they believe the stock is selling at a discount. The process to forecast potential future movements in Tesla stock prices will progressively intensify as more and more investors race to purchase the company's equity. Get together, Kevin then looks at the company's historical performance. One of the primary determinants is Tesla's delivery history. Based on the most recent quarter, Kevin notes that Tesla's actual deliveries of 254,700 fell short of the predicted range of 255 to 268,000. Kevin mentions a data that is interesting. The X deliveries, of which there were over 16,162, represent a roughly 10% increase in production of this NX vehicles over the previous quarter, even though the Shanghai facility had to close because of secret laws. Additionally, Tesla just made public certain financial records that demonstrate the business produced a record number of cars in July. This, in my opinion, indicates that Tesla is well on its way to shortly regaining its stock price. Kevin, if Tesla continues at this rate, it may be aiming to create roughly 1.8 million cars annually compared to the 1.4 million predicted by the market. It's a great indication that Tesla will shortly recover. According to Kevin's projection, Tesla is expected to make 1.4 million cars in 2022. With a 50 to 60% growth rate, that means that by 2023, Tesla will produce 2.2 million cars, followed by 3.9 million in 2024, and 5.8 million cars in 2025. Demand is also crucial, and it appears that there is a sufficient market for Tesla cars. Indeed, consumers are purchasing electric vehicles from other companies, but this may be because they are unwilling to wait for Tesla. If Tesla produced enough cars to meet demand and customers didn't have to wait months to receive their purchase, more people would purchase Teslas, meaning that the automaker has a significant amount of untapped production growth. This is good news for Tesla because it indicates that the company can still grow at a high rate of about 50 to 60%, with revenue per car hovering around $52,000. Although this figure may rise in the future, we must maintain it at $52,000 since that would bring total revenue of over $300 billion. It's possible that total sales may reach $355 billion by 2025. Remember that Tesla has one of the more distinctive benefits. Tesla does not employ a layer of dealers, which is actually quite advantageous to margins because dealers often keep their dealerships afloat by pocketing around 10% of the sale price of the car. We refer to this as dealer markup. Instead of losing the 10 to the dealer, Tesla kept the 10 in its own wallet and eschewed the whole dealership scam. The company's margins will profit from this wonderful news. A lot of investors ignore this and don't consider this information. Tesla's price-to-earnings ratio is at 66. Although it's not an awful statistic, the state of the economy, geopolitical unrest, and other factors may make it seem dismal. This suggests that in the upcoming years, Tesla's price-to-earnings ratio may increase. According to Kevin's projections, Tesla's stock price should reach almost $2,200 per share in just 4 years if the company can maintain its current price-to-earnings ratio of 66 and exceed 20.5 with it. This would imply an annual rate of return of 33.57. Given that its stock price is expected to rise rather than decline, Tesla appears to be an excellent company to invest in and will provide investors with a high rate of return over time. Please remember that we are discussing longer-term investments here. Short-term investments may not yield a return due to the extreme volatility of the current market, which makes it very difficult to forecast what will occur in the near future. A crucial factor that Kevin takes into account in his film is Tesla's decision to lay off 10 employees. Some investors are surprised by the recent layoffs at Tesla, but as Meet Kevin notes, the company primarily let go of labor workers. This doesn't mean that the company plans to reduce production or anything of the sort. Rather, it just illustrates how advanced artificial intelligence, AI technology allows Tesla to perform some routine tasks without the need for human labor. It is also true that other employees have left the company, which is encouraging because it indicates that Tesla is aware of the current state of the economy and potential recession. According to Kevin, the company is planning for hard times and reducing costs. This is typical given the current situation, so investors shouldn't be unduly deterred by these layoffs. Letting go of some workers gives Tesla an opportunity to increase its earnings during the recession by cutting off some extra costs, which is exactly what investors want to see. This is especially good in light of the approaching earnings recession. A term Meet Kevin refers to in his Tesla videos. An earnings recession means that a company has a negative revenue multiple quarters in a row. This is already happening for some big companies, for example Nike, which repeatedly declared a negative revenue of about 5%, as Tesla has done. Minimizing expenses through layoffs can help avoid the situation and keeps the company growing. Therefore, as Meet Kevin uncovers in his videos, many things that at first seem like bad signs for the company turn out to be good things that companies do on purpose in order to protect themselves from harsh volatile times. Another good sign that shows that Tesla's doing quite well is the positive cash flow for the company. As Meet Kevin mentions, every day there is more cash coming in. Rather than leaving Tesla, it's impressive for a startup, particularly in the automotive sector, where many U.S. automakers have declared bankruptcy. However, if Tesla's cash flow were to turn negative for any reason, this could have a negative impact on the company's stock price, as many investors would likely become wary and unwilling to invest for the time being. In conclusion, based on my analysis of Kevin's video, it appears that Tesla's price per share will not drop much further, and we think it won't fall below 600. There are numerous indications that Tesla will recover and that its share price will rise dramatically in the long term. In one of his Tesla predictions, Kevin states that the company's stock price should reach roughly $2,200 per share in just 4 years. Please share your thoughts with us regarding Tesla's future, though. Post your forecasts and predictions in the comments section below. Thank you for observing. While the channel is still active, please subscribe to it, like and comment on this video, and see the rest of our videos. Select either of these 2 videos that are displayed on your screen. I'll see you over there.